On the program today, World Bank approves $3 billion for vaccines in Africa. Nigeria's Twitter ban leaves some businesses in the lurch. A diamond rush grips South African village after discovery of unidentified stones. Thank you for joining us on the program. This is Business Incorporated. I'm Ladi Williams. Let's get started with the market numbers. It was more of red colors amongst the markets we track here in Africa, with the GSE index down at intraday 0.35%. As at 12 noon, the NGX was trading marginally low at 0.03%. In Egypt, the EGX30 was also in the red, down 0.07% at intraday. Kenya closed 0.33% positive on Monday. And now to the Middle Eastern markets. It's quite mixed today. In the UAE, both the Abu Dhabi market and the Dubai financial markets were up 0.07% and 0.05% each. Meanwhile, Saudi Arabia lost the most, down 0.40%, as well as the Qatari index down 0.17%. And European stocks traded in positive territory in the morning as investors await the start of the U.S. Federal Reserve's latest monetary policy meeting. Let's hear more now from Chelsea Delaney in Frankfurt. Hello, Chelsea. Great to have you. Well, EU stocks are on track for their longest winning streak since 2019. How long can this rally go on?
Well, all signs here in Europe are really pointing positive, and a part of that is because of the messages we've been getting from central bankers, particularly here in Europe, but also in the U.S. over the past couple of weeks. They say they're not concerned about the rise in inflation. So investors are betting that even though inflation is rising, that central bank policy is going to remain very supportive for the time being. That's the main expectation from their Federal Reserve meeting tomorrow that you mentioned, is that the Fed will stress that they still have a long way to go until the economy is recovered and until they can start pulling back that stimulus. So you have an environment where stocks are very supported because of the central bank policies. At the same time, here in Europe, you've seen economies really starting to reopen in a major way over the past couple of weeks. Travel is restarting. Travel restrictions are going down. Vaccination rates are going up. So that's starting to have a really positive impact on a whole range of businesses here in Europe. So stocks are definitely responding to that right now. The Stoxx Euro 600 index, which is really the broadest benchmark here in Europe, has risen for 8 straight days. The DAX here in Frankfurt has been at record highs this week. So really a lot of positive sentiment here in Europe.
All right, but the EU and the US have reportedly agreed to extend the suspension of tariffs imposed as part of a long-running aircraft subsidy dispute. Can you tell us more about this?
So this is related to the 20-year-old Airbus-Boeing dispute. So this is really a fight between the EU and the U.S. over the sort of support that they give to the major aircraft makers in each market. Here in Europe, that's Airbus. In the U.S., that's Boeing. Both sides have said that their governments are giving unfair subsidies to these companies. So we've seen this really play out in terms of tariffs over the past 2 to 3 years. There have been about $11.5 billion worth of tariffs that have been implemented on aircraft between the EU and the U.S., as well as a broad range of other goods, things like French wine, German wine, Irish whiskey, cheeses here in Europe. All of these industries have also gotten swept up into this tariff war. Today, we did see the EU and the U.S. have a bit of a breakthrough in Brussels. They say they're going to suspend these tariffs for the next 5 years as they try to come to some sort of long-term permanent agreement to how they can fund these aircraft carriers manufacturers going forward. So that's a boon not just for Airbus and Boeing, but also for all of these industries that have been hit really hard by these tariffs.
All right, let's look at inflation now. German inflation rose to the highest level in a decade in May, according to new data. What is driving the prices higher?
So inflation is really being driven by energy prices for the most part. This is the same case as in the U.S. and many other parts of the world. Over the past several months, oil prices in particular have really spiked as economies start to pick up back up, as demand starts to pick back up for oil after that huge crash we saw during the pandemic. So that's really driven up the cost of things like gasoline, diesel, as well as heating fuels that people use, in their homes or in restaurants, things like that. We saw double-digit gains for those items in May here in Germany, but also we're seeing growth in other parts of the economy as well. Things like services, things like going to restaurants are getting more expensive. Bikes, garden tools, all of these areas are starting to rise as well. But as I said earlier, many economists here expect that most of these gains will be quite temporary. It's in part sort of these teething effects as we sort of work through the reopening of these economies and the energy price spike, which should start to abate, most economists believe.
All right, Chelsea, always great to have you. Thank you so much for the update. Do enjoy the rest of your day. All right, so London now. The London stock market seems to be shrugging off the delay to the final easing of lockdown in England. FTSE 100 index was up 16 points in the morning after ending Monday's session at a pandemic closing high. Let's see what has changed this intraday. Let's talk to Juliana now. Great to have you, Juliana. The FTSE 100 went higher this morning despite lockdown easing delay. How much is the unemployment data released this morning filtering into investors' sentiments today?
Lots is a short answer, Laddie. Good afternoon. The FTSE has held on to those gains that it witnessed at early trading and intraday. And this is, of course, down to those unemployment figures. For the fourth consecutive month, unemployment has fallen in the UK, now stands at about 4.7%. This is historically and internationally low. In the last month, 220,000 people have joined the labour market. And it does appear as if there seems to be some sort of recovery amongst travel and leisure-related stocks. BA owner IAG, their shares are up by 1.93%. We've also seen a little bit of a rally amongst hotel and restaurant operators. So it's all good, all pretty positive at intraday in London. The FTSE All-Share is up 0.22%. The FTSE 100 is up by 0.24%. And the FTSE 250 is up by 0.17%. In the currencies market, the British pound is down right now on the US dollar by 0.20%, also down on the euro by 0.21%, and down on the Japanese yen by 0.20%.
All right, I see the British pound is still going down there, but some analysts have spotted a very concerning rise in long-term unemployment among the youths. You would recall that younger workers were hit particularly badly by the pandemic, with under 25-year-olds making up almost two-thirds of the jobs lost. How is the government responding to these concerns?
Yeah, it is an issue. The UK's youth unemployment, particularly as there are still 1.8 million people that are relying on the furlough scheme, which will be coming to an end in September. I believe about 772,000 of those people are between the ages of 16 to 24. Yes, they've bared the brunt of the job losses because they typically have worked in the sectors that have lost so much. That's the high street, those are the hospitality sector, etc. Rishi Sunak, the Chancellor of the Exchequer, last year launched a £2 billion scheme called the Youth Kickstart Scheme to try and subsidise employment places for 6 months for young people looking for jobs. The problem is, since it started, I believe there have been about 200,000 successful applicants in England and Wales, but only 20,000 people have started those jobs. So there is a little bit of concern about perhaps some bureaucracy or the fact that it's just not working. And also as well, this Kickstart scheme is only really for job seekers. It's not for people, young people in education who still want to work. We are in June. This is the time where exams are finishing. Lots of young people are looking for labour. But, one good thing is vacancies are rising here in the UK. So hopefully, fingers crossed, a lot of these, employers that are looking for individuals can start with that 16 to 24-year-old age demographic.
All right, fingers crossed there. Well, on corporate news now, Boohoo has reported further strong sales growth on the back of the online shopping boom seen during the pandemic as it launched a new Debenhams digital department store. But recall the disappearance of Debenhams' name from the high street with all stores around the country closed led to loss of about 12,000 jobs.
Yes, it did, and Boohoo took it off. But yeah, separate story. But I've got to say, Boohoo have completely, smashed expectations. Once again, the fast fashion retailer is really the supreme king or queen of high street online fast fashion. They did buy that Debenhams brand for a steal a couple of months ago, and it seems to be doing okay under their watch. This time last year, they already had a record-breaking quarter. I believe they had revenues of over £325 million. Fast forward a year, they've got revenues in the quarter of over £400 million, doing exceptionally well in America, also doing well here in the UK. But they do have a shadow that hangs over their head, and that is that modern slavery scandal, massive scandal that even got the attention of UK border controls. They were US border controls. They wasn't even sure whether or not they'd be letting any Boohoo products in because they were so concerned about the pretty shocking ways they were treating their staff in factories in a place called Leicester, where they did have a cluster of COVID-19 cases. Now, they said that they are doing their absolute best to make sure they keep an eye on their suppliers, but not enough to impress investors. There is an investor group called Glass Ceiling. They are asking and urging investors on Friday to not vote in the co-founder of Boohoo. Her name is Anna somebody. I'll have to get that name again. But yes, she is supposed to be going up for the reappointment of director on Friday, and they're saying that she shouldn't because of what she's overseen. But then she's also overseen this successful collaboration with Debenhams and other Arcadia brands such as Dorothy Perkins, Burton and Wallace. But another great day for Boohoo.com. They seem to be going on the up and up, Laddie. Don't know if you've ever shopped there.
Great day for Boohoo. Not really, though. But my wife does, actually. Anyway, Juliana, thank you so much. So great to talk to you as always.
Thank you.
All right, let's look at the shares in Asia Pacific. They were mixed today with Australian and Japanese stocks leading gains regionally. The Nikkei 225 in Japan gained 0.96% to finish the trading day at 29,441 points, while the Topix index advanced 0.8% to close at 1,975.48 points. The S&P ASX 200 jumped 0.92% to close at 7,379. Members of the Reserve Bank of Australia's board agreed it would be premature to consider ceasing the bond purchase program. Minutes from the central bank's monetary policy meeting for June showed. South Korea's Kospi edged 0.2% higher, a day at 3,258.63 points. Elsewhere, mainland Chinese stocks closed lower, with the Shanghai Composite slipping 0.92%, while the Shenzhen Component dipped 0.86%. Hong Kong's Hang Seng Index declined about 0.6% as a final hour of trading. And U.S. stock futures slightly higher in early morning trade today after the Nasdaq Composite and S&P 500 registered new record highs ahead of the Federal Reserve's latest monetary policy meeting. Dow futures was down 48 points. S&P 500 futures and Nasdaq 100 futures both traded in mildly positive territory. On Monday, the S&P 500 gained 0.2% to close at a new record of 4,255.15 points. The Dow Jones Industrial Average, however, fell 85 points. The Nasdaq Composite was the relative outperformer, gaining 0.8% to close at an all-time high. Traders will listen closely for comments on inflation and the Fed's eventual tapering plans. Investors will also be watching for another inflation gauge released today. May's retail sales data also slated for release at 8:30 a.m. Eastern Time. And oil prices rose in early trade, with Brent gaining a fourth consecutive session as the prospect of extra supply coming to the market soon from Iran faded, with talks dragging on over the United States rejoining a nuclear agreement with Tehran. Brent crude was up by 43 cents at $73.29 a barrel and risen 0.2% on Monday. U.S. oil gained 41 cents to $71.29 a barrel, having slipped 3 cents in the previous session. Direct discussions between the United States and Iran, along with other parties, lifting the sanctions on Iran that would allow the OPEC member to resume exports of crude. Other members of the Organization of Petroleum Exporting Countries, along with major producers, including Russia, a group known as OPEC Plus, have been withholding output to support prices amid the pandemic. And Business Incorporated comes back in a moment. Do stay with us. We'll be talking commodities, looking at liquefied petroleum gas. That's in a moment. Do stay with us. Welcome back. You're still watching Business Incorporated live from Channels HQ. Now to stories from the African continent. The World Bank has approved $3 billion funding to cover vaccination in 32 countries around the world, which include 15 nations in Africa. In a statement made at the G7 Leaders Summit in the United Kingdom, the World Bank's president, David Malpass, said the multilateral finance institution is partnering with the African Union to deploy vaccines for 400 million Africans. He mentioned that the World Bank Group has committed over $125 billion since the start of the COVID-19 pandemic to combat the economic, health, as well as social impacts of the pandemic, which is the fastest and largest crisis response in its history. He also explained that the funding is helping more than 100 countries strengthen pandemic preparedness, protect the poor and jobs, and jumpstart a climate-friendly recovery. On the commodities market update now, our focus today is on liquefied petroleum gas, otherwise known as cooking gas. The domestic supply of liquefied petroleum gas jumped by 34% to around 877,000 metric tons in 2020, compared to 683,000 metric tons in 2019. While the demand for kerosene has reduced in the past year, let's bring in Favor Ogunraye now, research analyst with financial derivatives company, to help us make sense of this. Hello, Favor. Great to have you.
Thank you for having me.
Yes. So this divergence in the demand and supply of LPG versus kerosene, do you attribute the increase in supply of LPG to the decline in demand for kerosene?
Well, for now, it's not really clear how the deregulation in the kerosene market has affected the supply of liquefied petroleum gas. But we believe that there's a change in how consumers are being safety conscious, and that has made them to choose and adopt safer and convenient methods of cooking, which can be met by gas as against the use of firewood or kerosene. And that alone accounts for the increasing demand that we are seeing in liquefied petroleum gas. And once there's an increase in this demand, we should expect that supply will increase as well.
Okay. Well, the Nigerian government has consistently demanded a transition from fossil fuels, firewood and coal, to cleaner energy over the years. Consumers have resisted this change because of old values and stereotypes. However, one major constraint of a seamless change has been price and availability of gas. What's your take on that?
Firstly, it's not just Nigeria. There is a global shift to clean energy, and one of it would be clean cooking through the use of liquefied petroleum gas. And the price of this commodity now in Nigeria, that's the 12.5 kg, has increased by about 16%, coupled with the fact that general inflation is at 18%, and even food inflation is about 22.7%. I mean, comparing these together, liquefied petroleum gas is doing better, but then we can't overlook the fact that an increase in the price of liquefied petroleum gas means increased cost for the users, and that alone can also impede the demand for liquefied petroleum gas, and that can slow down the transition to clean energy, of course.
All right, Favor, always great to have you on the program. Thank you so much for the update.
Thank you for having me.
Thank you. All right. In South Africa, more than 1,000 fortune seekers on Monday flocked to the village of Kotladi in KwaZulu-Natal province in search of what they believe to be diamonds after the discovery of unidentified stones in the area. The people traveled from across South Africa to join villagers who have been digging since Saturday after a herdsman who dug up the first stone on an open field with some believed to be quartz crystals put out the word. The discovery was a life changer, said one digger, Mendoza Bello, as he held a handful of tiny stones. The mines department said on Monday it was sending a team comprising of geological and mining experts to the site to collect samples and conduct an analysis. Some people have started selling the stones with a starting price ranging from 100 rand to 300 rand. And scores of small and medium-sized businesses in Nigeria are beginning to reel from the suspension of Twitter in the country. NOI polls estimate that 39.6 million Nigerians use Twitter, 20% of them for business advertisement and 18% to look for employment opportunities. Take a listen.
Lagos-based entrepreneur Ogechi Egemonu was selling more than 500,000 worth of watches, shoes and handbags on Twitter per week. Now, with the site suspended by the Nigerian government, Egemonu does not know how she will cope.
I feel very, very distraught. Like, I feel really disorganized. I don't know how to put myself back together because I've been trying to build this. I've been trying to build this platform. I've been trying to put my best, be consistent. They said, do this, post more, talk to more people. I've done everything I needed to do, but then I was able to do that because I had the platform. But right now, I don't have that platform anymore.
Scores of small and medium-sized businesses across Africa's most populous nation and largest economy are reeling from the indefinite suspension of the social media site.
I know for sure it's been very damaging because a lot of firms run on ad campaigns. A lot of business opportunity has been created just by the whole influencer thing on Twitter. People make money, people spend money. It's kind of like a mini ecosystem on its own, and then just snatching that away from Nigerians is kind of
Nigeria announced the move on the 4th of June, 2 days after the platform removed a post from President Muhammadu Buhari threatening to punish regional separatists. Most telecommunication sites have blocked access.
We're looking at potential loss in their revenue, looking at potential loss, and then the ripple effect would be on output growth. Because if manufacturing sector is affected, if businesses are affected, if trade sector is affected, we're looking at potential, decline in economic growth and then economic development. Why? Because the standard of living will be a lot worse compared to the cost of living.
If it gets to a stage whereby there is no social media, I would really pick up my CV and start looking for job opportunities and how to fix myself into the society and how to earn a livelihood, because social media is where I eat.
With 1 in 3 Nigerians unemployed, youths restless, rampant insecurity grinding economic activity to a halt, many economic watchers say this may be Africa's biggest threat.
And that's it on Business Incorporated. Thank you for watching. I'm Ladi Williams. Show me the team is bye for now.